Nigeria has secured a $238 million loan from the Japan International Cooperation Agency to strengthen its national power grid. The deal followed engagements led by President Bola Tinubu and Power Minister Adebayo Adelabu at the TICAD 9 summit in Yokohama. According to the Ministry of Power, the JICA loan, backed by the Federal Executive Council funding, will finance grid expansion, including over 200 kilometers of new transmission lines, 6 substations, and the line bay extensions to boost efficiency and cut losses. Martin's Arogie partner, Tax, Energy and Natural Resources KPMG West Africa, joins me now to further discuss this subject. Welcome to the show. Great to see you, Martins.
It's a pleasure.
So can we actually just summarize the significance of this loan? Because I feel like over the past few years, we've heard about so many interventions and funding for the power sector. What is really different about this Japan-Nigeria partnership?
Okay. Interestingly, I can't tell you what is different. And when I heard of this, I think it was what you said was basically the first thing that came to my mind. What exactly will be different here? Because we've seen a whole lot of interventions in transmission over time. And yeah, I think people will tell you that our transmission capacity has probably improved from where it was about a decade ago, probably even doubled. But as they say, the taste of the pudding is in the eating. How does that translate to us having improved, reliable, consistent power supply in our homes? How does that translate to reduced instances or incidences of grid failure? It isn't particularly very clear how all of this will add up. And for me, that's where I have a challenge in terms of us setting what are the key performance indicators or criteria that we would like to see or this would lead to. And I say this under the background of, is this what we really should even be investing in?
Okay.
Because over the past few weeks, months, maybe a year or so, we've talked about grid decentralization. Should we be looking at building more embedded power plants and in a sense, decentralizing the grid in real effect? Because how much money would we need to put into transmission for us to say we've really fixed this sector? And is that actually still possible? And that's what's not clear to me at this point in time.
I mean, it's interesting you mentioned sort of the decentralized part of it, but if you look at the $238 million, and if you look at the value chain of the utility scale power sector, the grid, transmission, distribution, generation, where do you think the bulk of this money should be focused on from your perspective as an expert?
Okay. Apparently, this money would all go into transmission from what we've seen already. So I don't think we have any real say. But if I were given money right now, I would say I would focus more around building embedded power plants and also the last mile distribution infrastructure, ensuring that we put these plants closer to the distribution infrastructure, and then working on that distribution infrastructure to ensure that it gets to this concept of a national grid. I think it's outdated.
Really, that's interesting, because some people would argue, experts in the sector, that you need a mix of both. You need centralized systems, utility scale, then you need decentralized system. I saw that recently the government had entered this $750 million engagement of the World Bank for decentralized access. So you could argue that there is a place for that, but maybe for large-scale industry that sometimes or general consumers, sometimes you do still need to rely on the grid as an alternative.
Okay, so now that's where there's been a bit of confusion.
Okay.
Off-grid mini grids, which the $750 million are supposed to fix, is supposed to be for underserved areas, places without access to the grid. It's not what will lead to industrialization. It's more around access to power. We're talking about small rural communities where the power needs aren't that significant. It's a light bulb here, a ceiling fan there. And I think that's necessary because when you consider the cost of extending the grid to some of these areas, it may not make economic sense. So you need to find a different method for them. And that's where you have all of these small-scale mini-grids, solar home systems, and all of that, where the $750 million is focused on. It's very different from, because you can have an embedded grid-level plant within the distribution infrastructure. What it does is that you then cut off the need for transmission. So what we have today is I remember, I think the last time we had a major grid disturbance, it was something that happened in Benue, and the entire country didn't have light for a few days. That's not sustainable. So you can actually have grid, you can actually have grid infrastructure within the distribution network itself. So it's not small scale of grid, mini grid we're talking about. We're talking about grid level plants, but within the franchise area of a particular disco. So you cut off the transmission infrastructure.
Yeah, and I think that was clearly understood. I know distributed access is for last mile underserved community. I guess the point was having a mix of structures to serve different segments of the market. But let's focus now on the broader electricity market. We've had several interventions and initiatives in recent years. More recently, over the last 2 years, the decentralization strategy, allowing states, giving them more ownership and leeway, at least in principle, to sort of determine the course of their own electricity markets. How much of an impact, of a positive impact, have we seen thus far in your observation and the work you do? And what are some of the pain points that we're seeing?
I'm a big fan of decentralization. I don't know whether it's the same thing as what we've done, which is giving states the authority to regulate sectors of the market. I'm not particularly sure. The market needs to be regulated, but I don't think having multiple regulators is the key. I think we could easily have done that under the same regulatory framework that we already have, without necessarily having to create separate regulators. And you can see.
So is what you're saying, the decentralization of the electricity market does not have to mean the decentralization of the regulation of the market?
Exactly.
Right.
Yeah. I'm not particularly sold on having multiple regulators. And I think there are a number of issues that we probably didn't open our minds to when we decided to set up all of these different regulators. A case in point is Enugu State, where they came up with a tariff regime. Now, if you look at the tariff regime, first of all, it's first premeditated on federal government subsidy. And that's a difficult pain point, because you're asking yourself, how does a state say we've taken over control?
But we're relying on subsidies from the center.
Exactly.
It's sort of counterintuitive.
Exactly. And then if you take out the federal government subsidy, what it means is that in reality, the cost of power in most of the states will have to go up. Do they have the ability to, first of all, politically explain that to the citizens? One. And if you can't, do they have the capacity to take over the subsidy? The jury is out. So for me, decentralization is key, but does that necessarily mean a multitude of regulators? That's something I think we still need to get right.
And it's interesting because, if I look at it from a layman's perspective, if you control the supply or distribution of a commodity, then intuitively you should control the price. So the question is, if you're decentralizing generation and distribution and all the other parts of the value chain, but then you leave the pricing, which is a key part of regulation, to a centralized entity, are you not just also creating confusion around how the whole market is meant to work? I know it seems like a very complex issue here.
And it is, because if I were an investor and I was looking to go and play in the state market, I'll be asking myself, what may happen tomorrow? Would somebody wake up and then say, hang on a minute, why are you guys selling at 209? You should sell at 160. And I can't understand the basis or the basis is the federal government is going to pay a subsidy at some point. But who knows how long the federal government... So I need to have that bit of clarity from a commercial standpoint in order to be able to make that investment. And I don't really believe that you can take full regulatory control if you can't control all aspects.
Okay.
Right now, how many states actually have generation capacity within their states? What are they actually doing to attract generation capacity? So if generation capacity is totally outside of your control, and yet you're looking to control the full market, then there will always be that place where there is an overlap, because somebody else is regulating a fundamental part of that supply chain. And the price for that fundamental part is being fixed by somebody else. So you would always, it's convoluted. And that's something I think investors will probably be wary about.
I mean, you touch on commercial clarity for investors. Can you tell us some of the other things that are really important for investors now? Because I think observers of the sector sort of got the sense that this decentralization push would suddenly open up a wellspring of financing and funding and investment going into states that had adopted the initiative. But what are some of the investment pain points we're seeing now for investors in terms of the space beyond sort of the commercial clarity?
Yeah, commercial clarity for me is still very key. Regulatory clarity is also very, very key. I think those are still two key areas that we still haven't been able to crack through, especially with respect to decentralization. There is no state today that I would say that they've been able to, in a sense, break ground on any new generation capacity. I'm talking about the states that have taken over regulatory control.
Why is that?
Again, because you still don't have commercial and regulatory clarity.
Okay.
And if you don't have that, it will be very, very difficult.
What about things like gas for generation? Because
That's
that's a key part of the entire value chain, the feedstock that goes into generation.
It's also going to be very key because, again, gas prices, the states can't control that. That's always going to be within the ambit of the federal regulatory authorities. And that's a fundamental key stock unless you're going to be relying on renewables or any other source for generation capacity within your state. So there's still a lot of conversations and talk that would have to happen between the states, the federal authorities, not only NEC, but also the oil and gas regulatory authorities, both the NUPRC and NMDPRA.
Yeah. Okay. So, given the challenges you clearly have around the structure, what is the ideal electricity sector management model in Nigeria? Because you clearly are seeing challenges with the decentralization push and some of the confusion and complexities. But how really should Nigeria's electricity sector be run today, structurally and in terms of the value chain? Which parts should be fully privatized, right? And I don't say that lightly because of the attempts to do it on so many fronts, especially on the transmission front. But yeah, let me hear your thoughts.
Okay. Today, generation and distribution, even though government retains certain degree of ownership, I would say are fully privatized because they are run fully by private sector players. The government has a seat on the board, but they're not involved in day-to-day decision making. I understand the concept of for security reasons, leaving transmission within the ambit of government. Even though I still believe that we can in a sense manage those security considerations and still privatize transmission. Because like I said, we've put a lot of money without any clear set performance. So if you look at the statement that was issued with respect to the GCAF fund, it talked about cut losses from where to when. So what's the current transmission losses that we are experiencing? If we invest this amount of money, what is it going to be over the next 6 months, 18 months? So all of these things are not particularly clear. And if you were a private sector player, if you were going to go and take just that sort of loan, these are sort of the questions that you'll be asking yourself and answering first before you then even make that economic case for why such a loan is even necessary in the first place. Maybe they've done that, but they just haven't shared that with members of the public. But it's important that we understand the journey that we are about to undertake and how it would impact all of this.
Outcome,
So for me, if we can't run transmission, because you can still leave it in government control and still run it like a viable commercial enterprise, what's the payback on these loans? Because at the end of the day, that the sector has to be able to generate the required funding to pay back the loans.
Absolutely.
Otherwise, it becomes a burden on ordinary taxpayers. So if it's not clear that we can do that with transmission, then I think we need to have a conversation around, do we also need to privatize transmission? Around the model, I still think that having a decentralized grid is the way to go. It's the concern I have is multiple regulation. There was a model a state government had attempted to introduce many years ago, which was they weren't going to take charge of regulation. What they were going to do was try and de-risk the investment climate within their state in order to be able to attract investments in both distribution and generation. So they wanted to attract generation capacity in the states, work with the discos to embed that generation capacity, and also improve the distribution infrastructure. I still think that that's where the states probably should be looking to play. But as they say, he who plays the pipe dictates the tune. So maybe if I'm going to be putting my own money down, I probably also want to have some control in terms of regulation. But I don't think that that's always the most effective way to do things. I'm more for less regulation and more around creating investment climates.
Yeah, and for years we've been talking about electricity sector debt. It's sort of been this shadow that has hung over the industry. And here we are taking on a loan that's going to go into transmission infrastructure and the like. We haven't totally cleared all the debt in the electricity market in Nigeria. What are some of the things we need to start doing now beyond transmission? Because the debt is sort of broadly across the value chain. And we know some of the reasons why that debt has panned out, a lack of sort of commercial pricing or power at end user level, collection, it's a whole losses, everything has come together. But what should we really be thinking about now in terms of taking on more borrowed money to fund our electricity infrastructure? What lessons have we learned that we should be applying to new types of these financing engagements? Okay,
I think we need to, again, I think there has to be clarity around the plan. In 2015, I think, or thereabouts, I was part of a meeting just before the elections where the IFC had sponsored some sort of, I won't say conference, to talk about the power sector. And one of the things that had been highlighted then was a 4-year plan. Everyone knew that it would have been unrealistic to charge cost-reflective tariffs from day one. We were coming from a background where Nigerians had seen power as something that we take for free. It was unreliable. It was the little you get, you pay the little you can for it. And now you were commercializing it. It would have been a very, very difficult conversation to say all of a sudden come and pay what cost-reflective tariff was. And so the plan then was to have a 4-year structure where tariffs go up at the same time as the quality of the service.
Yeah.
And over a 4-year period, we would get to a point where we could charge cost-reflective tariffs, and that period would also coincide with when we had consistent, reliable power. The difference was that the backlog or the difference, the subsidy would have been properly funded at that point in time. So from a DisCo, GenCo perspective, they would get full value, even though consumers did not get full value.
Sure.
And then after that 4-year period, if cost-reflective tariff was supposed to be 100, we would have gotten to somewhere around 150, which is higher than cost-reflective tariff.
Just to benefit the DisCos and the GenCos.
Not to benefit the DisCos and the GenCo, but to repay the funds that are used in stabilizing the sector over the 4-year period. Yeah. And then once that funds were repaid, you would then see a drop in tariff over a period of time again. I still think that that's the model we should go. And that first has to start with clarity as to say, how long will all of this take? What do we need to do? That conversation still hasn't taken place. Otherwise, we'll be back here where we're talking about this debt again.
And of course, the quality of supply as well.
Yeah.
And the consistency and stability of the grid. But thank you so much, Martin Arogie, Partner Tax, Energy and Natural Resources at KPMG. Great to speak to you on a very topical but forever complex issue. Thank you so much.